All right, welcome everyone. Thank you so much for joining us. Welcome to our workshop today. What is your business worth? Maximizing business value for a prosperous exit. This is such an important conversation, and I'm so excited that we're having this discussion today. I'm going to turn it over to our host and our expert, Andrea Jenson, and we're going to get rolling with this What's Your Business Worth workshop. Thanks for joining us.
Thanks, Dory. Welcome, everybody. As Dory mentioned, this is a very exciting topic because it's very related to a payday that I'm sure all of you are very interested in having when you are looking at exiting your business. So let's go ahead and dive in today. What is our agenda? Our goal is for you to leave this call knowing exactly how much you need to sell to be able to retire with the life that you want. And we'll go into more details on that. I'm really excited to walk you through that exercise. And the second thing is how to assess the current value of your business. So this one is very, very, very important because it's going to be your guiding light as you're setting this up. The third thing is what you can do right now in your business to increase the value. And when we talk about increasing the value, there are two templates that we're going to be giving you at the end of this training session. And they're going to be things that are going to help you to make sure that you are pricing your products and services correctly, so you have the right margins and the profit, right? We're going to talk about profit today a lot because it's super important and it's one of the main factors that are going to determine how much you're able to exit your business for, and a predictable profit planner that's going to show you here's where we're at, here's where we need to be, and then some recommendations on how to close that gap. So I would love to know what brought you here today. Are you looking to sell in 12 months? Are you looking to sell in 2 to 3 years, 5+ years? These are really important things to know as you're going through and learning this information, because it's a big component of how you're doing your day-to-day right now. Is we always want to work with the end goal in mind and work backwards and make decisions from where we want to be, not where we are today. So I know that there's a lot of good stuff to go over today, so I'm just going to jump in. But you might be asking, who's this girl? Who's telling me all this stuff? And there's a little bit about me on the slide here, but really I think it's just so important for you guys to know how passionate I am about this information that I'm sharing with you today. That's why I created the company, the Cash Flow CFO, so that we can help business owners just like you to understand, hey, I'm getting these great financial reports, but what the heck do I do with it? You need to understand what is the story that your financial statements are telling you, and they're telling you exactly what you need to do next in order to achieve your goal. And so that's really important. And that's really our passion, to help business owners just like you. Right now, between all the clients that we support, there's about 58 million in revenue that we consult on. That's a big number. That's a lot of moving pieces, right? So there's a lot that goes into that. I'm a member of the Epic Board of Investors. Roland Frazier is one of my mentors, and he is absolutely brilliant and one of the best out there at talking about setting up your business to exit, getting the right price, all of those things. So I'm happy to share this with you. Forbes and Success Magazine named me as a top strategist for 2023 to help scale a company. Super excited about that. And, just goes to, it lends back to what we're doing in the Cash Flow CFO, because that's really where the rubber hits the road, right? And the financial decisions that you're making in your business, they're either going to get you to where you want to be in 1 year, in 3 years, and 5 years, or you're going to stay stuck where you're at and you're going to have that plateau. I'm an investor, and I am the founder of the predictable profit method. And that is an accelerator that helps business models become as profitable as possible, as quickly as possible, so that you can achieve all of the things that you want to do. And that's why you're here today, right? So without further ado, let's go ahead and jump in. And I think it's good to start with some context, right? Why are we talking about this today? And the reason is that there is going to be a ginormous exodus of business owners who want to sell their business in the next couple of decades. So what does that mean to you? If you are here today because you also want to sell your business, you've got a lot of competition. And when there's a lot of competition, what does that do? It drives the prices down. There's only so many investors out there looking to buy businesses. And if they've got a lot to choose from, it becomes that much more important that your business is set up correctly and you have all the components in place to increase the valuation that you're going to receive when you go to sell your business. 12 million baby boomers, 70% of them are going to be retiring. That is just a staggering statistic. Here's the scary part. Only 30 to 40% of those businesses that are listed will actually sell. Why is that? Well, because they're not on my webinar today. They're not getting this information, number one. But number two, what happens is they don't understand what the buyer, what an investor, and there's several types of investors. They all look for something a little bit different, but they don't understand what the end buyer is going to be looking for. Therefore, they're not setting up their business with that purpose and that clarity. And that's really where the value comes from when you go to sell. So out of the businesses that do sell, they've taken the time to learn all of the components that they need to have built into their business to make it something that can transition from one owner to the other. And it is an asset that creates value and wealth for whoever owns it. And so we'll talk a little bit more about that. A lot of times, and we see this in our business, that they come to us and they think, oh, I'm going to sell and I'm going to sell for millions of dollars. And we actually run the numbers and there's a rude awakening when they go, oh, wait, that's how much my business is worth today. It's like, yes, that's how much it's worth today. But the good news is there's a lot of things that you can do. And hopefully you're starting giving yourself 12, 24, 36 months to be putting all these things in place that we're going to go over today. Okay, so some of the things that we're going to talk about: profit. I mentioned that. That's a big reason why businesses don't sell. They're not professionally managed, which means if you, the owner / operator, leave the business, there's no one left to run it. So that's a big one there. There's not proper documentation, right? There's not a recipe index for how you make profit, how you do all the things that your business does. So those are some of the things that are from the internal part of the business, are components of why they don't sell. But the other component is you have to be ready to go through due diligence. And what's due diligence? That means when somebody says, hey, I like your business, I want to buy it, let me come in and look under the hood. I need to see how everything is structured. So that's the structure of your entity. That's the completeness of your financial statements. That's your tax returns, match your financials, like all of those things, the legal components. That's a big one too, that a lot of businesses miss. And what happens is, the sad truth is that someone might come in and say, I'm going to offer you, 10 million for your business. Awesome. You get a letter of intent, an LOI. Then they start the due diligence process. And when they find that you're missing these items, they just start to deduct from that price, that purchase price. And what you're left with, imagine yourself, somebody offers you 10 million for your business. How excited would that make you, right? How, emotionally you're just like, yes, this is it, my big payday. You go through a month or two of due diligence and now all of a sudden they're offering you 4 million. Right? That is the reality of a business that is structured and set up in the right way to sell versus a business who doesn't know all of these things and is, going to have that rude awakening. And that's really hard. All right. So what we're going to do now is we're going to dive into step number one. So step number one in preparing to sell, you need to determine how much you, the business owner, you, the individual person, needs to sell your business for in order to retire off of. So if this is something, we talked about the number of baby boomers that are going to be exiting in the next, 5, 10, 20 years. What do they need to live off the rest of their life? How much monthly annual income do they need to have? And so that is the very first step. And so we're going to call that your exit number. So how do you calculate that? It's very, very simple. Just sit down, do a little bit of budgeting, right? Look at how much are you spending now to sustain the quality, the lifestyle that you have, right? So you want to look at everything. Just imagine, you have no income coming in, right? What are all the things that you need to spend the money on? You've got your house, whether that's, you're paying down a mortgage or rent, you've got utilities, you've got food, you've got travel, you've got auto, you've got literally go through that entire list and determine what is your desired monthly income. And then once you have that number, you're going to multiply it by 12 for the 12 months in a year. And that is going to be your desired annual income. Okay, so everybody write that down on your piece of paper. That's going to be your first 2 steps to calculate your exit number. And then I want you to think about that money is going to come from you investing the proceeds from your sale. So you can choose to, let's use that first example. You sold your business for $4 million. Okay. What are you going to do with that $4 million? You're going to invest it in a vehicle that is going to give you interest, right? That interest number is what you're going to live off of. So that's going to be your desired monthly annual income, is going to be the interest from where you invest that money. So some examples of places you can invest: real estate. That's a very, very popular one. It's a safe one. It's, one that definitely you should be looking at. Stock market, bonds, things like that. These are where you're going to invest the money from your sale, the proceeds, and you're going to live off of that interest. So when we talk about the interest, right, we're going to use somewhere between 4 and 5% as a conservative number. Yes, sometimes it's going to be higher, sometimes it might be lower, but when we average it out over a time span, that's a good number to use. So the final step in calculating your exit number is you're going to take that annual amount of money that you need to live off of, and you're going to divide it by your estimated return on investment. And that is going to be either 4 or 5%, you decide. But that number is going to be what you're going to have to sell your business for. Okay, so let me pause there for a second and let that sink in, because that is a very, very crucial first step in determining what is your business worth, how much do you need it to be worth, all of that stuff that we're talking about today. So let's go through an example here, just to kind of, so you can see the math behind it and have an example. So if you determine that, okay, I need $15,000 per month to live off of, perfect. Multiply that by 12, $180,000 a year is your annual income that you need to generate off of the interest of where you invest those proceeds from the sale. So 180,000 divided by 4%, your number is, drum roll please, $4,500,000. So that is your exit number. So if you want to have $180,000 a year off of a 4% interest, your return on your investment, 4.5 is your number, right? $4,500,000 is what you need to sell your business for. Okay. That is step number 1. So now we're going to move on to step number 2. Step number 2 in preparing to sell is we have to determine how much is your business currently worth? How much is it actually worth? If you were to take it to market, what are you going to be offered for it? So in order to determine what your business is currently worth, you need to have two numbers in order to value your business. So the first one is cash flow earnings, right? So when we look at that, that is either going to be, actually, hold on, I'll go into that in a second, but cash flow and earnings and industry multiple. Now I'm going to go into detail on what both of those are so that you can do the math on your own company. And to do the first one, how to get your cash flow / earnings, is there's two ways. Number one is SDE, seller discretionary earnings. Number two is EBITDA, earnings before interest, taxes, depreciation, and amortization. Now, if you're wondering what's the difference between the two, if they both get me to the end result, number one is you're going to use SDE if you are a owner operator. And so that's really important to understand. Do I work in my business day to day? And am I required for my business to function, right? Do I make sales? Do I deliver on the services? Do I do all the things, right? If you are an owner operator. EBITDA, you're going to use that method if you're a professionally managed company. And you're a professionally managed company if your business, you could take a month vacation and your business still grows and runs without you. You've got management in place. You've got all the pillars of your business are staffed and running the way that they're supposed to. And you are pretty much, hands off on the day to day, but you could be either on the board or you could be in the CEO advisor role, whatever that may be. Professionally managed company, you're going to use EBITDA, and that's earnings before interest, tax, depreciation, and amortization. So let's work on the first one, SDE. I think that the majority of our people joining us today are going to fall under the SDE method. And so I'm going to spend more time there and really dial that component in. If you are a professionally managed company, you're going to use EBITDA and reach out to me and I can help you walk through that calculation in more detail. But essentially, we're going to start with SDE, and this is how you're going to come up with this number. So the first thing you're going to do is you're going to look at your profit, right? What is your net income? So if you pull out your profit and loss statement and you look at the very top row, you've got your revenue, you've got all your expenses underneath it, and below that is your net income. From that number, you're going to add back several things. So you're going to add back, you're going to identify what are the expenses that are in my business that are not required to run it, right? So if we're talking about an owner-operated business, also could be called a lifestyle business, you're going to put things through through the business that aren't necessarily an absolute have to. So if somebody else were to pick up your company and start running it, would they be spending on, for example, let me walk you through some examples here. Actually, let me go. Yep. Okay, perfect. So some examples here, we've listed out a few. They could be memberships that aren't required, to keep the business operating. You might have a wife or a husband or a child on payroll. Do they contribute to the operations? Would the business still go if they weren't there doing it? Maybe, maybe not. But if that's not a key role, you can add that back in. Any personal expenses that you run through the business, maybe, you do your board meetings in Tahiti. That's not absolutely necessary, right? You're going to add back those things. So I want you to think of this as anything that as you go through your general ledger on your profit and loss statement accounts, right? You're going to look at and go, if I wasn't here and somebody else was running this business, would they make that same expenditure? And if the answer is no, then you're going to add that back to your profit, to your net income number. So that's where, let's see. So we've got an example here. If your net income is $125,000, you've identified $124,000 in add backs. For example, your total cash flow / earnings now becomes 249,000, right? You're just adding the two together because that is truly what the profit of the business would be if it was in someone else's hands. Okay, so once you know what your cash flow / earnings are, you're going to multiply that number to get your exit multiple. And that's going to be determined on what industry you're in. And, there's a couple different things that you're going to need to look at. So what we need to identify is an exit multiple is they pool together all the businesses within a certain period of time that are similar to yours that have sold, right? Just like if you were buying a house, right? Your agent your real estate agent is going to go out and pull comps, right? So what in your neighborhood has sold that's similar in size, square footage, bathrooms, bedrooms, and they're going to say, okay, these houses were similar to yours. They sold for this much. So I think we should list and sell your house for right around this much. Same concept as an exit multiple. So it's just not looking at houses and real estate. It's looking at businesses. So what other businesses have sold that are similar in size and revenue and industry to yours? And they come up with what the multiple is. So the multiple, this is a little bit technical for you guys here, but the future value added to a business at the time of sale. So the more upside your business has, right? And we're going to talk about how to increase the valuation, and some of that will speak to that. Then that means that if I'm selling my business to, someone down the road and they're saying, okay, I know that I can get this much more, like your business is worth this right now, but in 1 to 5 to 10 years, it's going to give me this much more value, right? Then they pay you more today because they know they're going to get that future value out of the business that you're selling. So that's one of the components there. So the higher the multiple represents the higher the earning potential for the future buyer. So hopefully that makes sense. It's a little bit of one of those, if you haven't heard it before, you might have to sit with it a while to kind of really soak it in, but it is very, very important for you to understand if you're looking at exiting your business in the future. So what exit multiples should you use? That is a great question. There are a lot of resources that you can find online that will help you to understand what your multiple is. So you're going to look at it industry specific, and then you're also going to look at it in the volume, right? The dollar amount of what your EBITDA or your SDE is. Because the higher, if you've got $1 million in profit, right? Whether that's SDE or EBITDA profit, you're going to sell for a higher multiple than if you're under. So for example, let's go through looking at some examples of actual information that was pulled from bizbuysell.com. We linked the source down below so you guys can go poke around and take a look at it. It's a great website to help you kind of wrap your brain around what is valuations and how does it work and things like that. For example, if you have an assisted living or a nursing home, your multiple is 4.24. If you have websites or e-commerce businesses, 3.33 is your multiple. So you're going to take your profit, right? And you're going to multiply it, which I'll get to in just a second. You're going to multiply it by using these numbers. So you're going to find what is it in your industry, your multiple, and then you're going to go through this calculation. So you're going to look at that cash flow earnings, whether it's SDE or EBITDA, and you're going to multiply it by that number that is the exit multiple. And that's going to give you the current value of your business, right? So it sounds super complex, but it's really, really, it's not. You just have to understand what are the variables that go in, and then that's how you're going to exit your business. So for example, here, let's go all the way back to when we calculated the SDE in a couple slides before. 249,000 was the cash flow / earnings of that business. If they're at a 3 times multiple, the current value of that business is $747,000. So what you're going to do for your business is you're going to go through steps 1, steps 2 to get to this point where you can say, okay, now I understand how much I want to sell my business for so that I can have the lifestyle that I want. And here's what it's actually worth today. Okay. So when you go through those exercises, you're going to identify if there's a gap, right? So this is a very common scenario, right? This is not like, oh, I need to sell it for 4.5. I'm only worth 750,000 right now. I'll never close the gap. No, that is absolutely not true. This is just, you've got to know where you want to go, right? Where's that end result? You don't get in your car, and I live in San Diego, and I don't get in my car and try to drive to LA and not use a map, and I'm going to end up in Mexico, right? That's exactly what we're doing here. You need to know, what are you putting in the GPS? Where's your end goal? Your end goal is the 4.5, and your starting point is the 747. Okay. So what are some of the things that you can do to increase, as you're getting ready to close that gap? Well, step 3 in preparing to sell is now you have to take action to find a solution to close that gap, right? So there's lots of ways you can do it. I'm going to walk you through some actions you can take right now in your business to be able to close that gap and start to, I think a lot of people overestimate what they can do in a year, and they underestimate what they can do in 3. And if you're doing this exercise right now in preparing to sell your business, then you have the perfect amount of time for a 2-year or a 3-year exit. Is it going to be, roll up your sleeves and really get to work? Yeah, it is. But I hope you see that the payoff, 747,000 or 4.5 million, it's quite a big difference. And it's a very big difference in how you're going to live your life, right? All right. So action number 1, make sure your prices are set for profitability. And 2, I put this on here because it's so, so, so important. And we see it so often. Too many business owners don't know the true cost of delivering what they're selling. Therefore, they do not price it right. So let me walk you through an example of this. You are an engineer. You have an engineering firm, and you offer 3 different services. If you have not sat down and taken the time to say, service number 1, here's how we deliver it. Here's all the team members. Here's their pay rates. Here's how many hours it takes. Here's all of the specific software that we have to use. Here's all of the, maybe you're going out to a job site to actually do measurements and do, gather the data that you need for your engineering reports. You have to pull every single cost that goes into delivering that service to make sure that your pricing is set correctly. So when you do that, then you make sure that, I always tell our clients, like, every dollar in revenue equals 100% to allocate in your business, right? So every dollar in revenue has to get allocated proportionately to your cost of goods sold, your general and administrative expenses, your marketing expenses, and your profit. And most people go, wait, profit? Why are you putting profit in there? Well, most business owners don't actually know what the purpose of profit is in their business. And so when we talk about profit, it's got to do a lot of the heavy lifting that you don't see on your P&L. So if you have debt that needs to be serviced, right? You've got a loan out, maybe you have an idle loan, maybe you have a line of credit, maybe you have credit card payments. Those payments, and actually let's take credit cards out of there. Let's just talk about loans where there's principal and interest. That interest is going to show up as an expense on your P&L, but that loan payment that you're making, that's on your balance sheet. So it's not on your P&L. So when you look at, okay, I made, 500,000 in sales. I had 400,000 in expenses. Okay, I know how much my profit is. That profit has to cover all of your debt service. In addition, it has to cover paying income taxes. It has to be money that you're earmarking for reinvestment, right? So maybe you need more fixed assets. Maybe you need to buy new machinery, new equipment. Maybe you need to hire more team, and you know it takes 45 days before they're actually client facing and producing revenue. Like, these are all of the components of what that profit bucket has to service. So, and then distributions is the fourth one, right? So we've got cost of goods sold, general and administrative, marketing, and profit. And then profit gets further split down into servicing debt, paying income taxes, distributions, and reinvestment into growth. So you've got a lot of ways you need to stretch that 100%, and you're going to allocate it in between what your business model requires to be profitable. And so that's something that a CFO, for example, that's right in their wheelhouse. That's what they do. That's what we do for our clients. And it's super, super important. But the first step in making sure you have enough profit or enough percent allocation in all of those buckets is to make sure that your pricing is set correctly. So in order to do that, we have a pricing analysis template that we're going to provide for you. And this is something that you can walk through, and it's going to give you step by step how to do this exercise. You fill it out with your information on your revenue streams, and you're going to understand, am I pricing my products correctly, or do I need to raise my prices? 99% of the time, you need to raise your prices. So we'll talk more about that later. So the second action that you need to do is you need to invest in your future. So there's a lot of other factors that contribute to increasing your cash flow and your earnings potential. But really what you need to do is you need to be looking at this as this business is an asset. Right now, I can sell it for $750,000, or I can hold it and do all the things to increase the value of that asset. That's going to give me that higher payday, down the road. And so that's where our predictable profit planner comes in. Because if you understand all the components that go into how to create a business that is profitable from the beginning, right? Why sell anything if you're not profitable? Why waste the energy and the staff time and commitment and all the things, right? Your sales, there's so much that goes into a business, so much heavy lifting that we do. If you're not pricing things and you're not profitable, like, why bother? Doesn't make any sense. But so many business owners don't go through these steps that we're going to outline for you in our predictable profit planner, and they miss the mark on setting up their business in a profitable way that's going to give them a nice payday now and a nice payday in the future. So we're going to share this with you as well, but I think it's important to kind of give you an overview of how do you increase the valuation of your business. You go through these steps. And these are the exact things that every business needs in order to be as profitable as possible. And the beauty of that is once you understand all the different levers that you can pull in your business to increase the profitability of every sale that you make, then it just becomes a rinse and repeat process, right? If you understand, okay, if I invest another 50,000 in my marketing, I know exactly what's going to happen to my bottom line, right? You've got that predictability in your business. And that is what buyers want. They want to understand, how does this whole business model work? And how do I know that I'm going to be profitable if I buy this business from you? And that is going to be the number one thing that sets you apart from all of the other businesses that are out there for sale, because nobody wants to buy a business and then have to fix a million things, right? If you can make your business as attractive as possible and as functional and profitable, you're going to be light years ahead of all of your other competition out there selling their businesses at the same time. So let me walk you through a little bit of what we have here. We have this broken down into 5 different modules. And the reason that we do that is because they layer on top of each other, just like building blocks. And you have to go through them in the phases that they're listed, because we're pulling apart all the different components of your business model and we're putting it back together in the most ideal way possible so that the business runs smooth. And we're starting to pull out metrics, data points. What's telling us that things are working the way that they're supposed to? That's what this is going to provide for us. So when we look at a profit roadmap, that's our first module. And that's essentially, we just walked you through a lot of what goes into creating that profit roadmap. If you understand where you want to be financially in your business with this asset that is your business in 1 year, 3 years, 5 years, we can 100% get you there, but we've got to have clarity of what does success look like 1, 3, 5 years down the road. That is going to be the profit roadmap. And from there, we're going to understand for you, the owner, are you paying yourself? How are you paying yourself according to the business entity that the structure you've put in place? Is it the right amount? What are your personal goals, right? Ultimately, whether you're going to sell your business or not, the ultimate goal of having this asset is to move the money from active generated income into passive generated income, right? So I don't think enough business owners look at it that way. They look at it as, oh, I want to do what I want to do, and I'm creating a job for myself. But you're really creating an asset, and that asset could have a lot of value for you in the future. But we have to look at also, how much do you need to be coming out of the business right now? And so that's all part of the profit roadmap that we're building for you. So months 1 and 2, we're getting in there. We're doing a lot of due diligence things, right? There's a lot here. Don't get scared by all these bullet points on here, because the nice thing is, you, the business owner, when you hire a CFO, you don't have to do this. They do it for you, right? So you just need to know right now, what are all of the things that go into getting you to where you need to be. So months 1 and 2, I'm not going to go into all the details here. You can see the most important thing here is a current year revenue projection, a current year cash flow, and a budget, right? Because if we want to drive from San Diego to Los Angeles, we need to know what turns do we make? Which streets do we take? What freeways do we get on? That's a cash flow and a budget, right? Every month we're looking at, what did we think was going to happen? What really happened? Do we need to make any adjustments? Plain and simple. So the second part of that is going to be the pricing for profits. So lucky you, we're sharing one of our resources already, so you can start to work on this in your business. That's a DIY solution. We offer a done-for-you solution. So that would be our team going through and pulling the data, going through and scrubbing your numbers for you so that we can pull that information, put all that together, and then that way you're able to go through and understand, and we'll help you set your pricing. We'll make recommendations. We're going to look at what's going on in the world. What are your competitors charging? What's the ceiling that you can charge that people will pay for that service, and make sure that you've got a business model that works. Sometimes that's an adjustment you have to make as well, right? A pivot. But it's a profitable one. And without that visibility, you would never know you need to, and you're just going to keep selling and not have enough margins in your business. So skip over to that one. We're doing a revenue matrix, a staff utilization schedule. If you are a service-based business, you absolutely need to have a staff utilization schedule that you are looking at and using as a tool every month in your business. That's going to tell you the maximum revenue you can generate based on your current staff workload. A COGS analysis, cost of goods analysis. We need to understand, how much does it cost you to deliver every single thing that you're selling, and to make sure that your profit and loss statement is set up in such a way that you can identify the profitability of every revenue stream. Pricing analysis and balance sheet ratios, right? Because all businesses at some point need financing. And what do the banks look at? Ratios. So we want to make sure that we're proactive on those and we have them lined up for you. And we're working on making incremental changes that are going to help strengthen your ratios should you go out for financing. Months 5 and 6, a marketing profit connection. This one is so, 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 so big, so important. And if you've ever worked with a CFO service before, I can almost guarantee they're not looking at this data. This is a leading indicator of what is going to happen, sales, revenue generation in your business. And if you're not looking at that on a monthly basis, then you are missing 40% of the whole equation of your business. Okay. So that consists of leads matrix, right? We need to understand, where are our leads coming from? How much are we spending on those leads? And what are they converting at? We're going to look at the conversion rate of overall of your sales. We're going to break that down into leads, cold leads to warm leads to a sales call to revenue, right? Lots of conversion rates all along the way in your sales pipeline. And you need to see that. You need to have clarity of, maybe you're missing, there's a big drop off in one of those sections of your sales pipeline. If you're not tracking it, you're not going to see, and you're just going to be throwing marketing dollars and it's going to be a waste. There'll be no return on that investment. We want to look at your customer lifetime value. We want to look at your customer retention rate. We want to look at, what should that entire marketing budget look like, right? When we talked about every dollar in revenue equals 100%, one of the big buckets that we're allocating a certain percentage to is marketing. And we need to understand, okay, when we break down based on your sales goals, right? How much revenue you want to generate in the 12 months. Then we say, okay, how many of each of your services or products do we need to sell to hit that revenue goal? And then we back into, what's your sales conversion rate currently for each of those? How many leads do you need? And then marketing budget. What is your customer acquisition? That's the connecting piece between my marketing budget and my sales activity, my marketing and my sales activity. And months 7 through 10, we're building out the KPIs, the key performance indicators. We want our business owners to have clear visibility into what is happening in their business and how is each piece of it functioning. So if we look at a financial dashboard, for example, we want to understand the KPIs between sales, marketing, our operational KPIs, our financial KPIs. These are all things that every business owner needs to have their finger on the pulse of. So what this does is, when you have KPIs and they're set up correctly and they're the right KPIs for your business model, you don't have to spend time digging through your P&L and your balance sheet and all those ratios and all those other things. You need to look at your KPIs every month, and it's a red light or a green light. If it's a green light, then cool. You don't have to spend any time in that function of your business. Move on to the next one. When you see a red light, that's where you should spend all of your time fixing that KPI. And when you dig into the KPIs, then you can see, okay, what are the variables that create this KPI? Which one is off? Now you've just zeroed in on where your business needs an adjustment. You make that adjustment next month, monitor and adjust, monitor and adjust. And that is how you get predictable profits. So this one's my favorite, of course, months 11 and 12, expand wealth and impact. So by the time we've gotten to this point, you understand all the components that go into your business model, how to be as profitable as possible with your current business model. And it really becomes now a strategy time, right? How are we doing tax strategy? Who are you working with? How is that being implemented in the business? The CFO is the quarterback for all of those components. We're looking at, your 3 and 5 year forecast. And at this point, this is where our clients go, oh, did I say I wanted to make 5 million in 3 years? Let's change that to 8 million, because now they understand all the components of how to get to 8 million. And it's not so scary anymore, right? They understand all the levers that they need to pull, when and how much it's going to cost them as they reinvest their profits into growth. And it just becomes this beautiful cog, well-oiled machine there. And this is also the personal wealth component, right? We've made this business model very profitable. And now we are talking more about, how do we move it from active income into passive income? And so how are we pulling money out of the business in the most tax advantageous way? Are we setting up different retirement plans, insurance plans? Like, that's where it gets to the fun part, right? It's like, I made this money. Now, how do I spend it as wisely as I can and transition it from the business active to personal passive? So that's a lot. I just covered about how to close the gap, right? We're increasing the value of the business by implementing all of these things. And we've done it several times. It's one of our favorite things to do is to get our clients from, they have this vision and this goal that they're like, I really just want to, sell the business and whatever it may look like, right? What's that next chapter of their life going to be once they're not, working, this business, this asset. And I've highlighted two of our exits here, and they're both different, right? They had different reasons they wanted to exit. They were at different stages in life, and they really just were looking at it from, I've built this incredible asset and now I'm ready to go do the next thing. But I want to make sure that my payday for that asset and all of that work that I did is been worth it, right? And so we've been able to work with them, increase the valuation of their business, and ultimately hold their hand through that whole due diligence and exit process. And I have to tell you, being on that conference call when the seller says, okay, I'm hitting transfer on the wire, and then the buyer says that, and then the seller says, our client, the seller says, okay, yep, I see it in the bank. And it's just like, that's the coolest thing ever. And if you've never experienced that, if you go through this process with somebody who has been there before, knows all the components of it, can hold your hand through that process, it is such an enjoyable experience. As opposed to, I've seen and heard so many stories of how nerve-wracking and sleepless nights that sellers had because they got all this information and they're like, I'm overwhelmed. I don't know what they're even asking me for, not having somebody there that can guide them through the process. So, when we created the Cash Flow CFO, we did it for two very, very important reasons. Number one, you're reading it right here on these testimonials, right? This is, makes us the most happy and is really like, for our number nerd brains, this is the ultimate, like, we did it. And the second thing is, we see too many business owners, they don't have access to this information, and they're playing, a gambling game with their entire future, their family's livelihood, their livelihood. Just, it's a very scary thing to hear people going at it alone, or they haven't been building towards this goal of an exit, which means they haven't done all the things that they can do to strengthen the valuation of their business. So we don't want our fellow business owners to find themselves in that situation. And so that is why we do what we do. And we'd love to do it for you. So if you're serious about selling your business, reach out. It's absolutely free. Get on the phone with us, find out, where you're at, where you want to go, and what are the steps that you need to take to close that gap. And I guarantee you're going to look at it and go, oh my gosh, this costs so much less than I thought, because in our heads, we make it this big, scary thing. And it's really not. It's really an investment in a greater return that you're going to have if you sell your business with the right pieces in place. You're building the value in it, and you really understand all the components of what a buyer is looking for, and you can window dress, for lack of better terms, right? You want to set up your business as profitable and all the things buttoned up that a buyer is going to be looking for. And it's going to be a really fun process for you to go through selling your business. So if you're serious about selling, give us a call. We can give you some information and really help you to, get on that process to close the gap right away. Because like I said, the competition for selling is just going to get bigger and bigger as more baby boomers are exiting. And so you want to get a jump start on this now. So thank you so much for your time. I hope you found all this information super valuable. And, if you have questions, reach out, book a call. Here's all of our information. I would love to go through and answer any questions that you have specific to your business. So with that, Dory, I think we are at the end. and we'll wrap it up here.
Fantastic. What powerful information for business owners. Even though it's a lot, it's actually quite simple when it's broken down in this way. And we talk to business owners all the time who are hiring marketing experts and hiring sales teams and hiring admin and operation support. And this just highlights how important that financial support is to take your business to the next level. So absolutely love it. Thank you so much, everyone. And we hope to hear from you. Let's sell your business.
All right. Thank you.